What's up traders, welcome to another exciting video on Trading Channel. Today we're going to be looking at the XXX777 Avtomat FXE, which is currently available on TradingChannel.com for just $34.99 only. But we are going to be giving this expert advisor to 5 random people in the comment section below. So all you need to do is to make sure you're following us, and then you comment the name of this expert advisor in the comment section. We're going to be choosing 5 random people at the end of the month that are going to be getting this forex robot for free. Now I'm also going to be attaching the link to this page below so you can view it and purchase if you want. Okay, so let's look at some of the settings of this forex robot. The platform for this forex robot is on MT4, and you can see the currency pairs listed here by the developer. Okay, and the trading time frame here is the 5 minutes time frame, which is recommended by the developer. And then you can see some of the other settings here. Okay, now some of the things that we know about this forex robot with regards to the strategy is that it looks like it is a scalping strategy. Okay, and also for the risk management, it uses sort of a martingale system. Okay, so we're going to be doing a back test of this forex robot, and you're going to be seeing the live performance, and I'm also going to be giving you my honest opinion on this forex robot. Okay, so make sure that you follow me and you watch my videos before you buy a forex robot, so that you get the real performance of the forex robot and you get my honest opinion on it, so that at the end of the day you don't get scammed for thousands of dollars purchasing a fake forex robot. Okay, so let's quickly head over to our MT4. Now, once you purchase the forex robot from TradingChannel.com, the installation process is very simple and easy. All you need to do is to extract the file you downloaded, which you're going to be given a link to download, and then you extract the file, and then you copy the EXO file in the folder, and then you come over to your MT4 terminal. Make sure it's opened, make sure you have the symbol recommended and on the time frame recommended here. Now all you need to do is to head over to file, open your data folder here, and then you click on MQ4, and then you click on export, and then you paste it here. Okay, so once you paste it here, you click on your navigator icon here, or you can click on view and open navigator here. So once you have this, you right click on this section here and you refresh. Make sure that the expert advisor folder is opened. Okay, so it's open now. You right click and click on refresh, and then you drag the expert advisor to your chart, or you can double tap on it. So once you do that, you're going to get a pop-up here with the expert advisor settings, and then you can click on OK, and the expert advisor will be installed. Another thing you need to make sure to do is to make sure you have this button turned on. As you can see, it's off now, so I've turned it on. Okay, and you can also head over to tools, options, and make sure you have these two settings done here, these two checkboxes checked here, and if the expert advisor comes with the URL, you can add that URL here. Okay, so I'm just going to click on OK. Now let's quickly backtest this expert advisor here. I already have the XXX777 here below, and we're going to be backtesting this on Euro USD on the 5 minutes time frame. We're going to be using a spread of 10, so we can punish this strategy very well. And then we're going to be looking at, we're going to be using every tick. And let's just look at some of the expert advisor settings here. So you can see from the testing here, we are using this on a $10,000 account. And for the inputs, you can see I barely know some of the, I barely know anything here. Okay, it's all in a language that I don't understand. But if you're watching this video and you understand this language, then you can buy this forex robot. But if you don't understand this language, I don't recommend that you purchase this forex robot. Okay, but I'm sure there are some people who definitely understand this language and will understand what all of these settings are. Okay, so once you're done, you click on OK, and for the date, you're going to be backtesting this from November of 2024 down to the current date. Okay, so let's just close out of here and start this here. So you're going to be looking at the real performance here. You can see the backtest is on. I'm just going to expand this here, so you can see the live trades here. Just going to minimize this here. Okay, that's perfect. So we currently had a trade now. We had one sell trade here. We had another sell trade here. Now it's very obvious that you can see we had a sell trade, that we had a take profit here. Let me look at the results. So we had a sell trade, we had a take profit, but we don't have a stop loss. Okay, so we are using a constant lot size. We had a sell trade, we have take profits, but no stop loss. Now, when it comes to trading on USD pairs like Euro USD, USD JPY, GBP USD, USD pairs in general, I do not recommend strategies like this. This is because USD pairs tend to move in some way, and they could move very fast in one direction. And if they do, and you're trading a strategy without a stop loss, you could get very hot. You could end up blowing your account. You could end up holding a huge losing position. Okay, it's not recommended at all. Now, I don't know why this developer recommended this pair for this strategy, but you can obviously try out this strategy on other pairs. Okay, it's never limited. You can try it on other pairs and see how it works. Okay, so let's just keep playing this here. So you can see we had 2 trades and 2 profits. So if you're looking to trade this on a prop firm, you can backtest this and see if it works for you. Okay, but trading on your personal accounts, guys, I do not recommend using this strategy on USD pairs. So let's just keep watching. So we have another sell trade now, and we have a take profit. Now, another thing I'm going to say is that from what I can see so far, from the 3 trades I can see, I can easily tell you guys that this strategy is not overfitted. Okay, it's not overfitted. It's a very simple strategy with very simple conditions. Okay. But there's this thing about martingale systems. You know, martingale systems tends to make a lot of trading strategies look good, including poor strategies. So in reality, you never know if a trading strategy is good or not, because it uses a martingale system where it only hits a take profit. Okay, so you can see something funny just happened now. So we are holding buy position and a sell position simultaneously, and we're going to see more of this again. We are going to talk about it. Okay, so you can see here, this is exactly one of the things I said now. So we had a sell trade now, and the price has gone against us. Okay, and it keeps going against us. So in these points now, you could be in a huge drawdown here. Okay, and then let's just keep watching. So we have another position open here. But what's happening here, what the expert advisor is actually doing now is very smart. So we currently have 3 trades open now, and the expert advisor has modified the take profit to a place where if the price gets to that take profit, it's going to close the 3 trades. So the take profits, let me see if it's here. So the take profit has been modified. As you can see, the take profit has been modified for all of the orders to a single value. So if it reaches that value, the 3 trades will be closed, and the cumulative profits of those trades will be positive. Okay, so that's very smart. But risk wise, guys, I don't think so, especially for USD pairs. Like I said, I'm going to keep saying it so it keeps ringing in your head. So when someone says martingale strategy and USD pairs, it looks very fishy. Okay, so now we are seeing the expert advisor hold multiple trades here, and it's also opening the buy trade. Let me see if that's going to happen again. So as you can see right now, just like I said, we are now in a very huge drawdown. You can see this account balance, which is, you know, constantly going up, just like you expect for martingale strategies. And you can see our account equity. So we are currently in a drawdown of about $2,500, right? Or I think about, yeah, $2,000 right now, which is very bad, right? About 20% of our accounts. And this is the point where, as a trader, you start getting scared. Okay, is the market ever going to come down? I just need to stop trading. You know, I need my money back. You know, stuff like that. But let's just keep watching. So we're currently in December right now. We're done with November. Let's just see if we're going to have so you can see we're now even in a wash drawdown. And okay, this let me just use this instance right now. So you can now see we now have multiple trades. So we have sell trades and we have buy trades. Okay, so I didn't also talk about the lot size. Okay, so from martingale strategies, you can see the lot size increase. So from 0.5 to 0.75 to 1.1, increasing like that. It might not be double, okay, but you can see it increase. Okay, so we have a sell position here and we also have a buy position opened. So I'm going to assume that the expert advisor opens buy orders and sell orders. For example, you can see here 2 open orders buy, 3 open orders sell. Okay, now I do not recommend this, especially if you're trading using a martingale technology or a martingale system for your risk management. Now here's why, and there are 2 major reasons why. Number one is this: you're probably never going to see your account balance equal to your account equity, because the expert advisor could go up, right, and close all of your buy trade. And when it gets to that point, you still have sell trades open that are currently in a losing position. The expert advisor could then open buy positions, go down to hit your sell positions, close all of your sell positions, and then you still have buy positions open. So I don't recommend this. You can trade this. The whole idea of martingale systems is trading on pairs or securities with a high probability of them ranging. Okay, so you look for the maximum range and you configure your strategy to be around there. Now we are banking on the fact that the price would never go up forever. So let's say we are opening sell orders. If the price keeps going up, we're fine, we're going to be in a loss, right? But if it comes back down, we are going to either make a lot of money or close all of our positions. So we are always banking on the fact that the price will come back down. But if you're hedging multiple positions here, automatically you don't even know what you want to wish for. You don't know if you want to wish for the price to go up or for the price to go down. Okay, and it's very impossible to close all of these positions at once. Okay, so that's one. Now the second one is this: if you have multiple positions like this opened, and let's see the price keeps ranging for a very long time without hitting any of the take profit levels, automatically you're going to be holding a lot of losses regards to swap. I don't know if you guys know this, but let's say you hold a trade overnight. Sometimes you could be charged a fee for holding that trade. Sometimes you could be paid a fee, right? Depending on the interest rates of the two symbols or currencies that you're trading. Now, the amount of money that you're being paid is way less than the amount of money that you're being charged, and the difference is the spread. So if you're holding multiple trades like this and the price doesn't hit any of your take profit levels, that difference, which is the spread, may continue to accumulate over time and all of a sudden become very, very large. Okay, so if you hold a trade for 2-3 months, it could become very large and you end up holding a lot of losses with regards, just because you're holding these 2 trades. So I don't recommend it. Okay, so let's just keep playing. But like I said, you never know with regards to strategy. You could try this on another pair or another security and it works. Okay, so make sure to backtest. If you purchase a forex report, one of the worst things you can do as an algo trader is to head over to a platform, whether it's Trading Kernel, whether it's any other platform, purchase a forex report, and then you go to just install it without backtesting it. Okay, you need to backtest it, see the strategy, see trade live, right? I remember I always tell you, if something looks too good to be true, especially in the forex trading industry, it most likely is. There's something wrong. Okay, so if you get into that scenario where forex report looks too good to be true, you can contact me or you can watch my videos here and you're going to see the real truths behind that forex report. Okay, so as you can see, we've currently closed all of our trades and we are currently at a balance of about 11,000 USD. Okay, so that's about $1,000 profits, but at some point we were at a drawdown of about let's assume $7,300. Okay, so chat, tell me if it makes sense to hold a drawdown of about $2,500 just to make $1,000 profits. Does that make sense? Right, let me know in the comments. So like I said, very few trades in a month, and this is the point of peace, right? This was the point of peace. I think this was in December, yeah, December 30th. So you could have taken a break here if you were trading with this strategy for the year, right, and then resume trading in January. Personally, I don't do that when it comes to martingale strategies, because you never even know when they are going to, close all positions. But martingale strategies are good. Okay, unlike what you see on the media, martingale strategies are very good. They are lifesavers, but it depends on the pair you're trading and the way you trade it. Okay, so we've gone into the same thing just like I said previously. Now, buy position, sell position. On USD pairs, I don't recommend this. Okay, it might work. You can try it and let me know. Okay, if you're comfortable with this graph here and this chart, you can let me know. Okay, you can also reach out to our Stack platform and share your settings, and if you make a good profit with this software, you can let us know so that we can copy your settings and use them. Okay, so just like I said, now remember we still have one buy position here. Now you can see the price is coming down. I can't even see that buy position. Okay, look at the buy position here, right? So the expert advisor has now opened another trade for the buy position where we still have a sell position here. So now our buy position has been closed. Okay, we just had another one opened, and then we have sell positions here. Okay, so personally I don't like this kind of strategy. I don't like it, but from what I can see so far, the strategy is not overfitted. Okay, but reality, you never know with martingale strategies, because martingale technologies or strategies make trading strategies so good. Remember, martingale is not the strategy, it's the technology added to the strategy. Okay, so you can have a trading strategy and decide to use take profit and stop loss. You could decide to have a simple entry and exit. You could also decide to martingale it. Okay, so that's what martingale means. So martingale strategies or martingale, they make a trading strategy look so good because you're just having take profits, no stop loss levels. So they make them look so good, and in reality you'd never know. But from what I can see so far, since the trades are very few, okay, it says that this strategy is not overfitted, which is good, because if you can backtest this and optimize properly, right, you can get a particular settings that has a high probability of working in the future. Okay, so we are currently on January 23rd. Do we have a trade open? Yes, we have a trade opened, which is a sell trade. So you can see exactly what I said. The price went up and we left the sell trades behind. Okay, I don't recommend this at all when it comes to USD pairs. Okay, you could try this out on some other pairs. I won't say them in this video, but you can try it out on other pairs and it could work very well for you. Okay, so you can see right now we ended up in a loss here. So let's look at the strategy report here. I'm just going to take this up so you can see this properly here. So we lost about 1,358 USD here, which was about 13% thereabout. I think our highest equity here was about, our highest profit rather was about 1,900. Okay, so as you know, the trade was closed because it was the close of the back test. Okay, so otherwise we would have been holding this amount in a drawdown, depending on when Euro USD comes down to trigger our close or our take profits. Okay, So we also had 23 trades, which is very okay. So not much trading costs. And then we had short positions, one of about 57 and 66. Okay, so this is kind of reasonable because when it comes to martingale strategies, you usually have very high winning positions because you only have take profits. The only scenarios where you're hitting a loss is when the price goes against you and you try to open multiple trades. So the initial positions you open will end up closing in a loss, while the other positions will end up in a profit large enough to cover for the losses. Okay, so that's the only losses that you get on the strategy. So the accuracy or the winning trades are very high. So some it could get up to 90% even. Okay, depending on the strategy itself. Okay, so don't get deceived by these values. It's not about the amount of profit trades you make, it's about the drawdown. Okay, so you could have just one trade where it goes against you and blows your account. Okay, so that's the secret of martingale strategies and martingale technologies. So if you like this video, guys, make sure to give this a like, comment what you think about this strategy performance below, and make sure to follow me so that you can see my honest opinion of forex robots like this. Okay, so I'll see you in the next video. Bye for now.